Let us now welcome the following. Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Eli M. Remolona Jr. Deputy Governor Zeno Ronald R. Abinoja of the Monetary and Economic Sector. And Officer in Charge Dennis D. Lapid of the Monetary Policy Subsector. May we invite Governor Remolona to share his remarks on the monetary policy decision.
Good afternoon. The Monetary Board held its scheduled policy meeting today, guided, as always, by our primary mandate to keep inflation low, which supports balanced and sustainable economic growth. Today, the Monetary Board decided to raise the BSP's key interest rate by a quarter of a percent to 4.5%. The reason is clear. The inflation outlook has deteriorated amid the ongoing conflict in the Middle East. Higher oil and fertilizer prices are expected to spill over to food prices and services. Core inflation is rising, highlighting the risk of demand-driven inflation. Headline inflation is now projected to breach our tolerance range not just this year, but in 2027 as well. Inflation expectations are rising further, increasing the risk that they will de-anchor from our target. This can cause inflation to become persistent, hurting households as well as businesses. This measured increase is intended to contain the buildup of spillover effects and keep inflation expectations anchored. It should still accommodate economic recovery over the medium term. Going forward, the Monetary Board will take all necessary actions to ensure inflation returns to the 3% target. As always, we will be guided by data in pursuing our primary mandate. Thank you. With that, I turn for more details.
Thank you, Governor. Good morning to our attendees to this press conference. Governor, I will be providing perhaps very quickly some of the details behind the forecasts underlying today's decision. So for perhaps again, we can provide the inflation forecast for 2026 and 2027. As always, the relevant horizon refers to the next year, at least 12 months from now, where monetary policy will be more effective. So the inflation forecast for 2026 is now seen at 6.3%, and then for 2027, an average inflation of 4.3%. As mentioned by the Governor and as stated in the press release, both years now are beyond the tolerance range, above 4%. Particularly. And what could explain this shift in the inflation forecast? First, we now explicitly recognize in the forecast the broadening price pressures across the CPI. Oil prices, global oil prices would have impact on transport costs. The increase in fertilizer prices will have an impact, knock-on impact on food prices, and these have been explicitly included in the latest central forecast. At the same time, we also update the forecast to include the latest CPI numbers, particularly the March inflation numbers, which registered at 4.1%. We will continue to update the forecast moving forward to take into account developments both in terms of the global supply shock as well as the spillover impacts on domestic prices.
Thank you, Governor, and thank you, DG Zeno. We now open the floor to questions. But first, we will accommodate questions on site, and then we can move on to questions online. For our on site participants, reminder to please raise your hand and wait for the microphone to be handed to you. Also, please state your name and your organization. We are now ready for your questions. We'll be taking the first question from this side.
Good afternoon, Governor. This is Keisha Taasan from the Philippine Star. In your statement, you described this as a preemptive move. Does this mark the start of a tightening cycle? And is it safe to say that the easing cycle is over? And should markets expect a tightening bias for the rest of 2026?
Keisha, as always, our decisions are driven by the latest data. But the way it usually works, with the data that usually comes in, we tend to do things in steps, so we don't go all the way right away. And we hope that's the case. We hope there's not a big enough surprise that forces us to deviate from the usual process that we take.
Thank you, Governor.
Governor, just to follow up, is it safe to say that the easing cycle is over?
I think it's fairly safe to say it's over.
Thank you, Governor. Oh,
Hello, good afternoon. This is Dirico from Manila Bulletin. Gov, there was a mention on the heightened risk of the anchoring from inflation target. I'm wondering, Gov, if a 50 bips hike was considered in this decision for a more maybe forceful intervention to tame the surging prices.
We looked at scenarios. In time of this kind of uncertainty, scenarios are more useful than projections with forecast errors. So we looked very carefully at different scenarios, and one of them would have required a 50 basis point hike.
Bakit po hindi yun yung final decision?
We weighed the likelihood of each scenario. We discussed, including what we would do, what we could do next, and the most reasonable scenario was one in which 25 basis points today, and then we'll consider the next steps. We usually don't want to do 50, 25. And then 100, we usually want to keep it steady if the data can support it. But for now, the way we look at the data, it suggests that the easing cycle is over and we won't make very large moves.
thank you, Governor. Any more questions? Oh.
Hi, good afternoon, Governor. Mike Arceo from the Manila Times. Gov, since your inflation forecast is already higher than the target this year, and you said that inflation expectations can be the anchored, do you think that inflation could hit 8% again this year, since it's already 6.3 something for this year? Thank you, Gov. And do you think it would remain above 5% in the coming months? Thank you.
I think it will remain about 5% for most of this year. We don't think it will de-anchor, but it's possible it will de-anchor. Then we would have to change our strategy.
Thank you, Governor. Next question.
Hi, Gov, and to our BSP officials. Gov, meeting in March, You said economic recovery is still projected to be weak in the first half. What are you seeing now in terms of economic recovery? Has the situation worsened?
I think 4.3% this year, and then higher in 2027. It's kind of the opposite for inflation. It's higher this year and lower next year. But Zeno has the numbers.
So, in terms of the growth dynamics, we shared in the last policy meeting some numbers. So the general trend will be the same. The numbers will be very similar to what we announced last time. Close to more than 4% this year, around between 4 and 5, and then closer to 6%, closer to 6% next year. The narrative will still be the same. Most of the growth this year will be coming from the second half. Fiscal policy will contribute in the recovery. We think that there could also be, and this will continue until 2027. And in the statement also, it may be noted that in the press statement, a measured increase in the policy rate will still accommodate economic recovery over the medium term. So we see inflation rising for most of the year, but still in real terms, the policy rate will remain accommodative in this environment, and that will help the economic activities during the year.
Okay. And can you also discuss the scenarios you discussed during your meeting in terms of the oil prices? How sticky will it be for the rest of the year?
So the main scenario is based on what we are seeing in the futures market. So in the near term, it will continue to be high. Right now, spot prices are close to 100, although it's been quite volatile. The past week, we've seen it between 95 to 100. But the general trend is that the oil prices will decline, but very gradually until end of this year and perhaps even further into 2027. As the governor has mentioned, it's a very uncertain environment. So we built around that path several alternative paths for oil. It could be $10 or $20 higher, or it could be $5, $10 lower than what we are seeing in the futures prices. So all of those scenarios were considered by the Monetary Board today.
Sir, just going back to the scenarios, you mentioned a while ago that you, of course, discussed several scenarios, including one that may require 50 basis points, which, of course, it's not happening at the moment. Could you be able to explain that, Governor, what type of scenario you're looking at? And do you assign probabilities as to how the scenarios, the likelihood of these scenarios happening? That one. Thank you, Gov.
I think the bad scenario, which would require 50 basis points, was mainly a clear evidence of expectations beginning to de-anchor, and then an expectation that the Middle East conflict will be prolonged. So those are the two basic elements of the bad scenario.
Thank you, Governor. Any more questions?
Hello. Hi, Governor. Ian
Hi.
Sagaral from the Philippine Daily Inquirer. I know you cannot disclose the votes, but was it a close call or was the decision unanimous po?
I think I can say it wasn't unanimous, uh, but I think I can say it was a good consensus uh, for the decision we made.
Mm. And then, Governor, I think earlier this month, the BSP announced some regulatory relief measures, like loan relief. Don't you think that raising borrowing costs at this point might be at odds with the recent loan relief that the BSP is offering?
I wouldn't say raising the policy rate makes the borrowing cost high, because remember, inflation is also going up. So in real terms, when you do the calculation of the real interest rate on borrowing, it's still negative. We're saying we're looking at inflation over 6%. The policy rate is 4.5. So you're facing negative 1.5% in terms of the borrowing cost.
Thank you, Governor. Next question, please.
Good afternoon, sir. Ditas Lopez from Bloomberg News. Sir, Gov, how soon can we expect the higher interest rate to be reflected in bank lending rates, and how soon will it impact growth? Thank you.
We usually think there's a significant lag. The peak effect might be 1 year, 1 year. But in situations like this where movements are big, then the effect could be, the lags could be shorter.
Thank you, Governor.
And are further rate hikes likely in coming monetary policy meetings? Thank you.
I think further rate hikes are part of the calculation, but of course it will always depend on what data we see next. But when we project, we look at several months, including more than a year, 2 years, in fact, even 3 years. And so it's not just what happens next month, but what we think will happen over the next several months.
Thank you, Governor. Next question, please.
Good afternoon po. Aaron from Business World. With inflation now staying above the 4% ceiling, does the BSP now see the impact of the war as not transitory anymore, more direct? And what would prompt further rate hikes moving
So a
forward?
scenario is the war will be prolonged, so that the inflation rate continues to rise more and more above our tolerance range. But there's another scenario that says it will end pretty soon. The movements of oil prices reflect that. They rise and then they come down and they rise again. But even as we speak, oil prices are still much higher than before the conflict started.
Thank you, Governor. Next question, please.
Good afternoon, Gov. Mikael Flores of Reuters. Gov, for the inflation forecast for 2027, I think you're more closely looking at that in terms of second round effects, no, and the risks of inflation, the anchoring. It's still above the tolerance range at 4.3%. So I wonder why the BSP at this time did not raise more than 25 basis points, given that the projection is still above the tolerance range, and whether the scenarios that you're looking at, there is hope or optimism among the members of the Monetary Board that those scenarios that you're looking at will likely not materialize in terms of probabilities in down the line.
So we're projecting slightly above 4% for for inflation in 2027. The idea is not to bring it back to within the tolerance range right away, because if we try to do that, then it's very costly for the economy. What we want is to bring it down to within the tolerance range within a reasonable period, without hurting the economy too much.
And for the BSP Gov, what's a reasonable, tolerance range? I understand that the goal is 3 plus or minus 1%, no? But given where we're at, what's the reasonable tolerance
Usually
range that you're looking at?
When we say it should be between 2 and 4%, that's our tolerance range. We usually think of that as in normal situations. But this is, I would say, an unusual situation. So we're more tolerant of the tolerance range.
So that means you're willing to, you could
Yeah.
be more tolerant with the higher inflation path as long as it's within that.
Yeah,
that range.
especially because it's a global supply shock. We would be less tolerant if it were because of what we do. But it's a global supply shock, and we're not going to kill ourselves just to bring it down to within the tolerance range right away.
Thank you very much, Governor. Next question, please.
Just to follow up, Governor, by the way, this is Jai from Bombo Radio Philippines. How confident is Bangko Sentral ng Pilipinas that inflation will return to 2 to 4% target range within the policy horizon?
Sorry, can you speak more slowly?
Sorry. How confident is Bangko Sentral ng Pilipinas that inflation will return to the 2 to 4% target range within the policy horizon, sir?
We think it will still be above the tolerance range in 2027. But we think it will be within the tolerance range by 2028.
Thank you, sir.
Thank you, Governor.
Hi, Paul. Curious lang if I'm curious if the BS has a or if this is the rate that the new Goldilocks rate as a.
We still look at the Goldilocks rate, but the Goldilocks rate is kind of a medium-term number, and it's kind of a number that doesn't work when you have so much volatility, when you have so much uncertainty.
You go.
Thank you very much, Governor. Next question, please. Next question, please.
Gov, we thought that the period of high inflation was already over last year, no? But with what happened with Iran, we see inflation pressures spiking again. So I was wondering if the BSP sees this as sort of a new normal, because we've seen parallels like when Russia invaded Ukraine, for example, oil prices triggered inflationary pressures as well.
Well, we thought like you. We thought we're heading for calm seas, but a storm hit, and now we feel that just monetary policy may not be enough because we're so vulnerable to oil price hikes. We're one of the hardest hit among different countries in the world when it comes to oil price hikes. So we think we should begin to diversify away from oil as a source of energy, for one thing, and then we diversify also our sources for oil and other forms of energy. So there are things I think that as a country we neglected, and I think as a country we should begin to consider alternatives to oil.
Thank you very much, Governor. Yes.
Gov, I'm just curious, how does it feel being BSP governor now, given that the the inflationary pressures are largely supply driven, which monetary authorities have very little control of. You're doing well on the demand side,
Yeah.
but then some things are just out of the BSP's control.
This is one of those times where Dennis, and myself earn our salaries.
And the NBNs.
And the monetary board members as well.
Thank you, Governor. Next question, please.
Gov, do you expect the rate hike to help support the peso? Thank you.
We don't use policy rates to support the peso. We try to let the peso seek its own level. We intervene just to smoothen the volatility and the swings a bit. But the market seems to know what it's doing. If you look at how it's moved over the past several months. So we leave it alone, mostly.
Thank you, Governor, and also to our on-site participants. Oh, okay.
Gov, two questions. Maybe for DG, this is the first one. In the March of cycle meeting, you say you didn't see core inflation reaching the 2 to 4% target. So did that change now? Will it breach the target now? Do you see core inflation reaching target in 2026?
It's almost 4.
So when we go back and look at March, even the March actual numbers, we already saw certain items reaching 4% or contributing more, and that has spilled over to our measure of underlying price pressure, the core inflation numbers. What we are doing now, especially as implied in this action by the Monetary Board today, is anticipating that indeed there could be more spillover effects moving forward. So the transport, food prices because of fertilizers, this may be reflected in core inflation moving forward. It is possible that we could see core going near the upper end of the tolerance range for the headline inflation. That is included in the scenarios and the assessment that was discussed by MB.
And for Gov Eli, in the March cycle meeting, you described the rate hike could be painful. So is it still the case now, or is the spillover effects of inflation and consumption, will that be more painful now? So that's why you decided to do the rate hike.
In March, it wasn't clear to us that fiscal policy would start to kick in. But now it seems we're more confident now that fiscal policy will be more stimulative than before. The government will start spending more. I think spending of the government slowed down because of this effort to discipline its spending. And now I think they have more or less controls in place, and they can begin to spend more.
I understand that you cannot give details of what you discussed, but during the meeting were there assurances from the government that the fiscal support will come, and did that convince you to move on a rate hike?
I'm not sure they were assurances, they were nods, I think. And there will be discussions this afternoon. One of the Monetary Board members is invited to attend.
Thank you, Governor. We will be taking one last question from our on-site participants.
Good afternoon po, Gov. I'm Rain Alberto from Business Mirror. Gov, you said earlier that the easing cycle, it's fair to say that the easing cycle is over and that inflation risks are rising further. Can we expect more rate hikes if ever the Middle East war continues?
Usually when you do monetary policy, you don't think of just one step at a time. You're thinking about several steps. this is a kind of strategy that minimizes the disruptions to the economy. So once we start raising the policy rate, we're likely to raise it again. That's a better strategy than raising it just one time and making a big hike instead of a small hike.
Thank you very much, Governor. Now we will be moving on to the questions that we received online. So for the first question, it is from Michael Ricafort of RCBC. What are the other possible regulatory relief measures similar to those seen during the COVID-19 pandemic or new ones that would help the economy better cope with the sharp increase in oil, fuel, and petroleum prices?
What are the other possible regulatory? We're doing things that are similar to what we did for COVID, but maybe Dennis has details.
So some of the possible measures that would be considered would include grace periods for affected borrowers, deferment of agricultural loan payments, temporary relief on non-performing loans. And also, we still have the currency exchange facility for repatriated overseas workers. And also ensuring adequate liquidity, especially in the money and the bond markets through our monetary operations.
Thank you, OIC Dennis. The next question is from Edison Gonzalez of Billionario News Channel. Governor, the current inflationary pressures are almost entirely driven by external supply shocks, global oil prices, and geopolitical tensions in the Middle East. Since monetary policy cannot drill more oil or end a conflict, how does raising interest rates help lower prices without simply making life more expensive for Filipinos through higher loan and credit card costs?
I think Edison said it better than I did. Monetary policy cannot drill for more oil. For now, yes, it's mainly a global supply shock, but we're beginning to see spillover effects into other consumer items, other items in the consumer basket, and those other items are affected by domestic demand, the prices of those other items. So that's how monetary policy can work.
Thank you, Governor. Okay, the next question is from Chris Poe of Goldman Sachs. Would BSP also be able to share your core CPI forecast?
I think so, yeah. We usually release our core inflation forecast. So core is just when you take out the more volatile elements of the consumer basket.
Thank you, Governor. We have a follow-up question from Chris. You mentioned policy rate would remain accommodative. Would BSP be able to share the neutral policy rate you have in mind?
We have a rough estimate. We're continuing to refine the estimate of the neutral policy rate. For now, it's I remember the graph, but I don't remember the number.
It's around 4.5, but the more relevant indicators are the expectations.
DG Zeno, maybe ask you to kindly repeat your answer.
So we continue to generate the estimates. As one can imagine, there are different models, different approaches. And the range right now is close to 4.5%, within some range, below and above that. But in the discussions of the Monetary Board, a lot of focus has shifted, as the Governor has mentioned, to other indicators right now, given the very uncertain and volatile environment that we have now. So instead of focusing on just the neutral rate, the discussions have looked at more closely at the trends of inflation expectations, spillover effects, scenarios on second round effects. So these were uh, a lot of energy and discussions were devoted to these issues during the policy meeting.
Thank you very much, DG Zina. We have another question from Edison Gonzalez of Billionario News Channel. With the country under a state of national energy emergency and firms already facing margin pressures, is the BSP concerned that aggressive tightening could trigger a slowdown in hiring or even layoffs? How do you ensure that managing inflation expectations doesn't inadvertently lead us into a recession?
I think that's a tall order. We cannot really ensure anything. There's too many things involved, but monetary policy is always a balancing act. We try to control inflation so that it's within our range and as close as possible to the target. And if we overdo it, then it will slow down hiring, but we try not to overdo it.
Thank you very much, Governor Malona, DG Zino, and OIC Dennis. This concludes the Monetary Policy Stands press briefing. We would like to thank everyone, including those watching us live on Facebook, for joining us this afternoon. Maraming salamat po.